Today we want to talk about liquidity. Liquidity pools are the places in charts that there are a lot of nested sell and buy orders. Why these liquidities are important? Because the only thing that can move price is injection of a lot of enormous amount of orders, and those orders are getting filled by big institutions which needs the opposite side of the market to fill their orders. For example, they need buyers to sell to them and they need sellers to buy from them to fill their orders. The first kind of orders are market orders, which are the orders that get filled in markets instantly. Let's see. You can see that we have a very good support and resistance here. These lows are getting broken, and many classical traders will think that this is a breakdown to the downside. This is forming a double top here, and they are gonna trade this breakout to the downside. Those players that are gonna click and enter the market and that exact price are gonna be our market orders. When you want to buy an asset below your exact price, or you want to sell an asset higher than your exact price, it is going to be a limit order. Let's say that you see this wonderful support which has an inefficiency after that and is unmitigated, but you don't know when exactly the market is going to pull back to it. In these situations, we have something named limit order. You are going to put your order, for example, for one lot on that number, which is 1.5070, and you are going to wait for that order to get filled. This type of order, which you put for a buy on lower prices or you put for a sell on higher prices, is going to be a limit order. The opposite form of a limit order is a stop order. When you want to have an automatic buy in higher prices or automatic sell in lower prices, you are going to use an stop order, which gets filled when the market is going to break a price. Something very important to remember here is that stop losses are a kind of stop orders, and they get filled automatically by your broker when the price hits your stop loss. For example, imagine we are going to trade this setup like this. As you can see now, we have our entry here and our stop loss here. So if the price gets back to our entry point, it is going to fill our limit order. And if it continues to the downside and we realize that we are wrong, it is going to hit our stop loss, which is a stop order. You can see that our stop loss is on 1.50347, and if the price goes to that price and breaks that price, it is gonna fill our stop loss, which is a stop order. So now you understand what exactly is liquidity. These highs have liquidity, these lows have liquidity, this order block has its own liquidity below this point, and these trend lines has their own liquidity as well. Let's see all the kinds of price action liquidities on charts. By the way, it's Beyond Trade. I'm Mehran, and you can subscribe if you like to. So where are all those important orders are nested? All important highs and lows. They can be new or they can be old. All trend lines, all patterns like double tops, double bottoms, all order blocks, which we are going to call them smart money traps, all support and resistances, and all time frame highs and lows. We are going to talk about all of these kinds of liquidities in this episode, except time frame liquidity, which is for another episode. Let's see Bitcoin for this one. You can see that we have a very important all-time high on $63,000. And many traders think that yes, it is gonna get broken and we are gonna see $80,000, $100,000 in Bitcoin. We all saw those FOMO traders and FOMO gurus which didn't know what exactly a liquidity pool is. which is right in front of you, all-time high. All-time highs, like all old highs and lows, are gonna be very important liquidity pools. In those prices, you can see the news goes green. They say that the gold broke its all-time high, the Bitcoin broke its all-time high, the Bitcoin is gonna reach $80,000. We are gonna see $100,000 Bitcoin in 2020, and all those bullshits. Why? Because the big money, the big investors who have exchanges like Binance, and all those investors who has a lot of Bitcoin in profits, they are gonna need you to buy their sales, and retail traders are gonna do that for them. So a very good points of liquidity are gonna be old important highs and lows, which are gonna accompanied with those green news, and you can see that they are not gonna work most of the time. The second kind of liquidity is gonna be trend line liquidity, like here, 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 and here. You may think that trend lines sometimes work, and that's exactly how these markets are engineered. You should see some results here and there, so you continue to use them. I'm not saying that these strategies, technical analysis strategies, price action strategies, doesn't work. I'm saying that you should waste a lot of money and time to get mastered in them. But there is an easier and simpler way, a cheaper way, which we are introducing them to you in this channel. So don't forget to subscribe, because we have a long journey ahead of us. How to use trendline liquidity. As you can see, when these trend lines are in the opposite direction of the market, like a very small trend line here or a very small trend line here, that's pure liquidity. It's not gonna provide you with opportunities, and most of the time in the third touch, it's not gonna provide you with a good trade, or it is not gonna provide you with a trade at all. So we are gonna look for opposite side order blocks, like here. They are gonna provide us with a very good reaction that we can anticipate in that movement for profits. You may think that you can trade long-term trend lines, but that's false too. Let me show you. On this long-term trend line, you don't have a good trade, just some messy price action. Maybe this one is a good trade. On this long-term trend line, you don't have any good reaction. On the third touch, any opportunity. On this trend line as well, you don't have any opportunity to sell or buy the market on trend lines. But there is some very good ways to use these trend lines in your trading as liquidity pools or as a reversal point. So let's say we have this trend line, which may have one good trade. This trend line forms here or here. It may have this trade or this trade, which has a very small reward to risk ratio like this. But what's the importance of this trend line? First of all, we know that here we have a lot of liquidity. Here we have a lot of liquidity. Here we have a very good, important POI plus liquidity. So when this trend line breaks, we can anticipate that this is gonna be a good trade. To where? To this low and this low at least. Then we have another trend line here. You can see that we have another opposite side trend line as well, something like this here. So it broke this trend line to the upside on a very good order block. So it is an opportunity to trade to the upside, because this trend line especially has a lot of liquidity in it, which can cause the price to grab that liquidity. It came up to this imbalance and POI. It broke this trend line. This trend line is going to have a lot of liquidity as well, especially here and here. Here we have a good order block that we can anticipate. It is gonna continue the movement to the upside because it grabbed the trend line liquidity to this point. Then it starts to go higher. After that, we have a very good opportunity here. It came up, it grabbed the all-time high liquidity from this point. It broke the trend line liquidity and it broke this trend line as well. It is an opportunity to sell from this point and this point to where? At least to this point. Then we can see that it grabbed all these liquidities, all these trend line liquidities to this low. I'm not expecting you to start to trade these concepts. Just watch, take notes, and get ready for more details and more strategies. The next kind of liquidity are gonna be price action patterns. You can see that here we have a double top which failed. Here we have something like a head and shoulders which failed again. Here we have a double top. Here we have a double bottom and reversed head and shoulders. And here we have another reverse head and shoulders again. Because as you see, we may enter the market in different prices, but we are going to put our stop loss in same prices after those patterns. Now, how to use these pools of liquidity for trading. Doesn't matter what you use in your day trading as POIs. It can be support and resistances. It can be order blocks, but you now can pay attention to liquidity pools before those POIs. For example, if you are using support and resistances, we have a good support and resistance here. We have an old high, an old low here. That can be a pool of liquidities for you to take trades on this support. Or you can use this order block, and we have a lot of patterns above this order block, like this pattern, like this head and shoulders, and a lot of old lows which got grabbed. Not these two. Which got grabbed here, and you can buy the market from this point. Another thing that you can pay attention to, that here it is something advanced, but we have a very long-term trend broken here. We have a point of very good liquidity here. We have some blocks, breaker block here. We have a lot of alts to getting grabbed. It grabbed this high as well. So this is gonna be a good trade to the downside. To which place when the market doesn't have any kind of liquidity and has a very good POI, which is gonna be this support and resistance plus order block here. Yes, the market continued its movement to the downside, but the more probable price that we can partial our trade from here, or we can exit our trade, is going to be this price. As you can see, all these concepts are going to come together in the near future, so you can use them in your daily trading. The last kind of liquidity that we are going to talk about in this video is going to be support and resistances. Almost always the exact number of a support and resistance is going to be a liquidity point. The market is gonna break that support and resistance, is gonna reach to something after that support and resistance, and then starts to react to some kind of liquidity pool or order block or another POI. You can see that exactly happened here. We have a very good support and resistance here, which is a support, but the price broke that support, came down, grabbed this liquidity, and then started to go higher. We have another very good example here. The price came down, grabbed these two liquidities, which is gonna be one old low and one smart money trap. It came down to this fair value gap and then started to go higher. We have a very good support and resistance above that point, but it didn't react to that point very well. It grabbed the liquidity and the main movement started after grabbing that support and resistance liquidity. So the liquidity is the fuel of the market, and the market can't move without grabbing those liquidities and converting retail's money to advanced institutional smart money. We are going to talk about liquidity, inducements, smart money concepts in this channel. This video alone took about 7-8 hours to make. I'm not a very good editor, but your support, your subscription, your likes and comments are going to help me a lot. You can comment any other concept that you are interested to, so I can make videos about the concepts that you are interested to. Thank you for your time and watching. It's Beyond Trade.